All right, welcome back to the channel. Remember, everything we discuss here is for information and educational purposes only, not financial advice. Today, I wanted to come and talk to you about Netflix. It's one of the stocks that's always been on my watch list. It's a really great company. Netflix took a big dip the other day because it was in a deal with Warner Brothers Discovery, and the market felt that the deal was going to take too long to close and there were going to be problems with the deal. So all the big institutional buyers, all the big money people, they all jumped out of Netflix, which I thought was crazy. But being disciplined investors like we are, we have to take our time and decide when to jump back in. We can't just jump back in because the price dropped. That's not the right way to buy a dip, right? We need to figure out first where's our entry point, and we're going to walk through that today. All right, first thing before we jump to the chart, what you're seeing here is the Wall St Yardie dashboard. What you see right at the top is just the market overview. We're seeing that the market right now is just sideways. Everything is trending sideways, so we give it a nice little yellow color here. We also have our picks for the day, so you can always see some new ideas. Maybe these are some companies you know, maybe some you don't. So we're going to be able to look at these and see very quickly whether they have a good score, what the current price is, what they should be selling for. So you're kind of getting a deal here. So we like to show you the deals. And then over on the right, you see the sectors as well. So you can see the energy sector and utilities and consumer defensive is kind of taking the lead right now. This is not necessarily the most bullish sectors you want to see in the market. So we're in some pain right now for a lot of people. But that's what we're working with. We always work with whatever the market gives us. That's what we can do. And then though we have a list of congressional trades here. So you can see Representative Byron Donalds, he jumped in some ServiceNow stock. It looks like yesterday. So you can always see what's going on here at a quick glance on the dashboard when you get to the dashboard. But let's take a quick look at Netflix. Netflix here, we just type in the stock, select the ticker there. And then right away we see what Netflix is worth. We can see very quickly that Netflix, based on the Wall St Yardie calculations, is worth $122.78. It's currently trading at $96.94, so about $97. So it looks like we got about 20% and change, right, to go to the upside. So there's a little room here for us to trade. Not much really to invest per se, right? We like to see if we're investing long term, we want to have a better margin of safety. We want to have a little bit more room to work with. So that's where this buy price comes in. And then we drop our PE ratios, market cap, all the basics that you would normally see. And then we always give it a score. So we have our overall score, and then we have our growth score here. Anything over 75 is good, right, with the score. And then we also score the management. So we want to know if management is doing well with the investments. Are they bringing money back? And if I scroll down, you get a bigger picture of kind of how the growth and the management is looking, right? As you can see here with Netflix, well over 20%, 25, 27, 45% on all these things. Earnings per share, equity, revenue, cash flow. We look at all of these things across the board to make sure that operationally and fundamentally that this is a solid company. And then we look at management. How are they managing the money, right? Are they investing well? What's the investment, return on investment capital? 12%. 20%. These are all great numbers, right? So you had a couple years here where there was a blip, right? So that knocked down the score here for the free cash flow. I believe in that this time it was negative. So, we have some negative numbers there. So, and then we look at the debt. Debt is a very big thing. If you have a company with a lot of debt, or the debt is it's going to take them more than 3 years to pay off, you really don't want to mess with that company. That's not quality, right? Because they can get in trouble very fast, especially if the market turns and there's problems with them trying to get funding or more liquidity, as they say, or more cash to continue operations, then you're going to be in big trouble. In this case with Netflix, we only have 1 year of free cash flow in debt, so they can pay that off very easily. We're not worried about it, right? So great score. And we can see kind of what we have going on, and we even have a target here. So this is nice to have the target on Netflix so that we can see kind of where we might want to start thinking about getting out, right? So that 122 level. So let's keep that in mind. Flipping on over to the charts here. The other day I did a video which showed how to draw these support and resistance lines. We can go ahead and start from scratch on this one. So we'll go ahead over to our toolbar here in TradingView. I use TradingView. It's a very independent charting platform. I don't like the charts that come with my broker, right? So I'd rather use TradingView. If I switch brokers, change brokers, whatever, my charts stay the same, my lines stay the same. So that's why I like to stick with TradingView. So in TradingView, the third one down here, you have your Fibonacci tools. I like the Fibonacci retracement to draw my support and resistance. Easiest way to do it. There's another video here. I'll link to that video for you so that you can find that video and watch it, right? So here we go. We're going to start from the top. We're going to pick the highest on the chart here. My chart is looking over a 1 year time frame. And then I'm going to find the low down here and connect that low. Now, what I did notice about the low here is these two candles kind of around it are kind of off of the low, but they're very close. So I'm going to adjust the low here a little bit so that we can touch all of those. So now we have 1 touch, 2 touch, very close touch, 3, 4 touches. So this is a very strong support line now. And that's what we can use to continue to evaluate when and where we want to get in. If I go back and look at some of these other lines, we're off a little bit there, off a little bit here. So maybe we want to pull this down some. And these are just the little basic assessments, right? I'm okay if it peaks above just for a couple days here. And so I could bring it down because look what just happened, right? We now get touches here, much better than we had before. Much better than we had before here with these touches. So, and then even our current price is now a little tighter to this line. So I like it like this. So that's the one little adjustment I make at the top, one little adjustment at the bottom. And now you can see we have solid lines that we can trade against, right? So Netflix right now gapped up here after hitting this bottom, and then it went and boom, boom, and another big gap here. This was the day that they exited the Warner Brothers deal. The market rewarded them for that because the market thought that this Warner Brothers deal was terrible. This was the day they entered the deal. So you can see so they entered the deal. Things just started going the complete opposite way, right? So now that that's out of the way, the market players, the institutional buyers, right, the big money folks, we call them the institutional buyers, they're stepping in now and they're starting to buy Netflix again. They didn't want any part of this merger or acquisition that was happening with Warner Brothers. So all the big money exited. Whenever you see big money or institutional buyers, as you'll hear, they talk about on the big channels, or CNBC and those channels, is anytime they exit, that's the money. When money is leaving out of a stock, this is what happens, right? When they're selling it off, they don't want to be a part of it. This is what you will see happen. And there's usually an event tied to that. In this case, the event was the merger between Warner Brothers and Netflix that was announced. And now that that event is over, right, we start to see a bounce, okay? So let's drop a little line here on our sticker price that we had in the Wall St Yardie app. So I'll just drop 122 there just so we know where we are and what we're going to be able to do with that, right? So I'll just do my Wall St Yardie sticker price there. And then we can just kind of leave that there as our target. So that as we're trading this, if it starts getting up to this area, we know we maybe start selling some of our position or maybe selling some calls above. You know, I'm an options trader, so I'm always looking for the option way to play this. So you want to look for that and as we get up here. But we have several levels we can play as we go along. So right now we peaked up above this level. We're kind of testing it, if you will. We peaked up. Now we come back. We tested. We closed below today, March 10th, right, 2026. We closed below our line here, but it's not big enough to say that, you know, we're really below the line. If you notice, remember, support and resistance are always an area. So if I go and I find now this little area here, I'll just go ahead and drop that line, make that a little bigger so you guys can see. And then you see now I have this space here in between. So I'm going to see if this area holds and if it can start getting back up. And what I'm really looking for is Netflix to break above this level, which is the most recent high, right? We want to see it at the most recent high with higher volume, right? So if you're looking at my volume down here at the bottom, this orange line is my average volume. It's the 50-day moving average of volume. I want to see volume at least touch that line or get above it as it's breaking above this $100 level here on Netflix, right? So that's what I'm looking for. Netflix to break 100 with good volume that's going above my 50-day average volume, right? So I know right now, as long as Netflix is sitting between these two yellow lines right here in this zone, there's nothing for me to do. I'm waiting for it to go up. If it breaks down, okay, maybe I buy a put. You know, I know it'll most likely come back down here to $88, $89, call it. And then when it gets here, I'm looking for it to bounce again. So I may maybe take a put all the way down here. And then once that put is done, I cash out, boom. And if it then shows me strength and starts going back up, I maybe jump in a call, right? So that's how options traders deal with it. But if you're just buying a stock, you can use those same levels. If it dropped down to this level, buy some stock. Your stop loss in this one is a little tough because of the gap, but I would look somewhere, you know, maybe down here below the low of this candle here. So that would be 82.80, right? So if it gets below that after you buy it on the bounce here, then that would be your exit, right? So now you have a decent area. It's a little tougher with the gap, but that's okay. One thing I did want to point out, the gaps here are very interesting because on this day we had a gap down and then we went sideways and then we gapped up. And if you kind of notice, maybe I can zoom in for you here, you'll notice that the line, right, the low of this day is 79.25 and the low of this day is 79.45, which is higher than that one, right? So the line, we gapped over this whole thing. This is what they call an island bottom, right? When you leave these candles out here on the island, they're not connected to anything else, right? That's what leaves them on the island, not connected to any other candles here. These lows are not touching them. We go all the way through. So anytime you see an island bottom like that, especially with this gap up, and then you see the next day you had higher volume again, right? We're above, the volume is well above my orange average. When you see this, this is where you're going to see some strength, right? So this is a very, what they call bullish, right? Bullish meaning the price should be going up. Action in the price on the charts, right? So that's what we're looking for here. Now we're coming up here and we're going to rest. And this is maybe a little accumulation is what they call it. It's a term they use. Where it starts going sideways for a while and then maybe continues on up. So we're waiting for it to break here to show us that it's ready to continue on up. You know, we can always come back down. So don't think, you know, just because we're seeing this action that we're going to just automatically continue up. We can continue down. We don't try to predict per se, or we don't react to the prediction, right? Let me say it like that. We react to the price action, right? So that's what we want to focus on is, does price get above here? Is it good solid volume? Is it moving higher? And if the answer to that is yes, then you can go ahead and buy. The beautiful thing about this now is if that's what happens, your stop loss now becomes right here on today's low, which is 96.29. So maybe I'll put it at $96 for my stop loss. So I'll be down here, very tight, very close. You're not going to lose much if it does drop, right? Because you're going to get out at 96 if it drops down. And we know that if it drops down below that 96, it's probably coming all the way down here to 89, right? So that's what we're looking for. So right now, we're just kind of in wait and see mode on Netflix. So keep an eye on that one. We know our sticker price is 122. So we're waiting to see it break. If you're a short-term trader, much short-term, your short-term target here is 104, right? Maybe 105 level to give you a nice round number. And then the next one after that is 110 and then all the way up to 120, right? All right, so that's all I had for you. Don't forget to like and subscribe. Mash the notification button so you know when I drop the next video. It was nice chatting with you about this. So looking forward to the Wall St Yardie app coming out soon. So thank you and have a good one.